what's been behind some of the success of our acquisition activities has really been about buying businesses which are very similar to our own business, not overstretching ourselves, not moving into areas that we're not familiar with, that we haven't got experience in dealing with. And we've developed a very slick approach to the acquisitions, and it's a very well trodden path for us now, because we've been undertaking 30 or 40 acquisitions a year.
We have had a great time. We actually have, the profit growth has probably been almost skipped a year, in the sense that it's outperformed considerably what we would have anticipated or projected. So it just makes life more difficult to carry on driving it forward, and that's why we've done the foreign acquisition recently.
I think track record counts for an awful lot. You know, at the end of the day, it's the management team that are going to, you know, make or break the acquisition. So you are looking to a management team that have got experience and that have done that rigorous process. One of the reasons why we've got the people around the table here today is about high quality managers of businesses who've been very, very successful in doing that.
What you do realise when you've grown very quickly, as we have done, that you probably put fat on your back that you didn't really need. You know, just a simple thing, taking flowers off every table saves 100 grand a year. And yet so many customers said, you know, there wasn't enough space on the table, and yet we were still paying 100 grand a year again.
And it's been a terrible, 10 years of a tacit acceptance that manufacturing must go to China. Certain things do, labour intensive products, but there's a longer lead time, and there can be manufacturing done successfully in this marketplace, and there are a lot of manufacturers in the Northwest. Perhaps things will change and it won't all be financial service sector.
There is a sentiment that good businesses, if they move outside their current lending parameters, that good businesses are being forced to pay for what is deemed to be the bank's errors. You know, the raising of the, if you had a forum and said, right, what do you think about the new rate they're trying to charge you? The basic sort of message that comes through is, why should we pay for their cock up? And there is a very strong feeling about that.
There is an issue around cost of funds, you know, and I'm not suggesting that the banks completely fund themselves in the wholesale market, because we don't, but certainly the wholesale market is having a big impact on pricing. You know, if you look at Lloyds or some of the other major banks going into the wholesale market to borrow in their own name, you know, you're looking at borrowing over, say, a 3-year period at around the sort of 170 over LIBOR mark. If you went back 18 months ago, the institutions were borrowing at 20 basis points over LIBOR. So, as I say, I'm not suggesting that that's.
But is that not the proverbial we paying for what you got wrong? And I would say, I'd take it one further than that. If you take the government's position, the raising of the tax issue, how do they get the money back that they've had to pour into the financial institutions? They've had to raise the tax. One way or another, somebody has to pay for the errors that have been made in the financial institution. I do not think anybody understood what that exposure was, and that makes it very difficult for a banker, and you must face this, to come and talk to you about your business and your risk exposure and everything like that, because you look across the table and you're tarred with that brush, whether it was your fault or not, and you look across and you think, would I really listen to that guy's advice? And that is the reputation damage that's been done to the banking community. 1, you're paying for it. 2, you're paying tax for it. And 3, your respect for their ability to advise you whether you're trading sensibly or not is I think has diminished considerably.
I think the politicisation of the banks may become a national disaster. And it's not to throw dirt at Lloyds, but I think you've got practical, real implications for us around this table, whether you're red or blue. But you've got Dave quite rightly saying the bank is being the bank lending's being shorn up. But what happens if and when that process reverses? If sterling goes through the debt, if the government balance sheet deteriorates even further, and they start saying, well, I've actually got to use the banks as a conduit to get money back, what happens then? You've got political interference on businesses that should fail. It's bad news. You've got a direct example in your market. You must be hopping mad that they don't let it go, because that's not right. These things are going to cause long-term issues. They might save a few jobs in the interim.
The weaker you are, the better you are to negotiate. But
it's difficult for any of us to comprehend. I mean, I've always come from a very basic philosophy of, if I didn't understand it, I wouldn't do it.
Yeah.
And it's hard for a lot of us to understand some of the things that have happened, but they've happened. And if I go back to what does that mean for people around the table in terms of their relationships with the banks, we work very hard to try and understand the businesses, understand the strategy of the management team, and to support businesses.
They almost look immoral, don't they? You've got 15 sites of which 10 are losing money, and you dump the landlord, dump everything, and suddenly you've got a brilliant business, and your competitor sat there going, well, I'm in the same development as you, and I'm losing money on the site, but I've got a good business, I can't get rid of it.
Absolutely. And that happens in retail completely.
Yeah.
Well, retail is the place where it's happened most. They fundamentally keep businesses operating, where the risk is the whole world. I mean, if you go back, we've heard reference back to the 80s and 90s when there were recessions that were driven very much by appointments of receivers, and businesses were then typically traded by receivers for 6 or 8 weeks while there was an open marketing process. What's happened since then, there's a lot more sophistication in the world of business. So a lot more work goes on with the business prior to it hitting insolvency. So banks have quite sophisticated workout teams that will get to the issues. So there's a big understanding of what the issues are. The suppliers are ready for it happening, so suppliers won't sit back and allow an administrator to come and knock on the door and say, we're in administration for 6 weeks, we want some trading terms, we want existing prices. Suppliers are set up to deal with that, so they'll say, no, we're not going to trade with you unless you make this ransom payment. So the whole concept of the business continuing to trade in administration can become very difficult. Customers have typically sorted out alternative sourcing, so they can go and buy their products elsewhere. So in a day when you could look in and say, well, this is a reasonably strong business, it can trade healthily for 6 or 8 or 10 weeks, it's very difficult typically to do that now, and a lot of those businesses would wither and wouldn't survive. The alternatives, and pre-pack does have a terrible reception or perception, because of this perception that quite often it's the existing management or owners who flip the business, for want of a better word. But what typically comes out of it is preservation of employment, and if there is a decent business there, an ability for that business to continue trading and service its customer base and service its supply base, who, yes, will lose an element of its debt because it'll lose its unsecured debt, but in terms of if that business continues and survive on into the future, there's an ongoing income stream there for it, whereas a lot of those businesses wouldn't necessarily survive if they went into an insolvency process without some kind of deal being lined up for it at the outset.
We all want to get rid of loss-making stores. Everybody wants to get rid of a loss-making store or a loss-making unit, but that isn't open to a stronger business.